The recent FDIC report has stirred up concerns about the U.S. banking system, with alarming headlines about massive losses and banks at risk. But what's really going on, and should you be worried about your money? Let's break it down. The FDIC report revealed a $517 billion loss in unrealized losses across the entire banking sector in the first quarter of 2024. Additionally, 63 lenders were identified as potentially at risk of insolvency. These losses have been increasing for 9 consecutive quarters, which naturally raises eyebrows. While $517 billion sounds enormous, it's crucial to understand that these are unrealized losses. This means the banks haven't actually lost this money. It's more like a paper loss due to changes in interest rates. Think of it like your home's value dropping, but you're not selling. As for the 63 at-risk banks, they represent only 1.4% of total U.S. banks. While any bank failure is concerning, this number suggests we're not facing a systemic collapse. Unlike the 2008 financial crisis, which was driven by widespread loan defaults, credit risk, today's situation is primarily about interest rate risk. The Fed's rate hikes have decreased the value of banks' bond holdings, but this doesn't necessarily mean the banks are insolvent. The good news is that your bank deposits are likely safe. The FDIC insures deposits, and the Federal Reserve has shown its willingness to support the banking system. Remember the Bank Term Funding Program, BTFP, introduced after the Silicon Valley Bank failure in 2023? It's part of the safety net. The bigger concern for average Americans isn't losing their deposits, but potentially losing purchasing power due to inflation. Interestingly, past liquidity injections by the Fed have led to significant gains in various asset classes. 1. After the BTFP implementation in 2023, the S&P 500 gained 27%. 2. The Nasdaq rose by 50% in the same period. 3. Bitcoin surged by an impressive 215%. While staying informed about the banking sector's health is important, don't let fear paralyze you. Your money is likely safe in the bank, but it might not be working as hard for you as it could be. Consider exploring diverse investment opportunities, keeping in mind that different assets respond differently to economic changes. The U.S. banking system faces challenges, but a systemic collapse seems unlikely. Stay informed, consider diversifying your investments, and remember that economic shifts can bring both risks and opportunities. As always, consult with a financial advisor for personalized advice tailored to your situation. Keep watching this space for more updates on how economic changes might affect your financial future.